Joining me now is Andersen Capital Management's Chief Investment Officer, Peter Andersen. Peter, good to see you. Thank you so much for being here. And I know that there's been so much excitement around AI, but you've warned that it's double-edged, that you've got one impact on investors, but it does make cybersecurity an even bigger part of this story. Tell us more.
Absolutely. So, I'm a physicist at heart, Maria, and lately scientists have been doing something very interesting. They have started to repeat certain physical experiments, but how they do it is they take all the material, all the measuring equipment that they've used, right, and they upload it to AI, and they ask AI, is there a better way to use the equipment we have to get better results in experiments? And astonishingly, what it gives you back are first, it seems like nonsensical answers, but the scientists have discovered they are actually brilliant answers, and it's a better way to use the existing equipment. So that's a shocker in the physical science world. What I'm thinking about, though, is when the bad guys get in touch with this stuff, they're going to be able to use it the same way. So let me give you an example. Say you've got a water treatment facility plant. A hacker might have all the blueprints and all the information about the equipment there, and they could ask AI the same thing. What's a better way for me to hack into this that nobody else would have thought of? There is the double-edged sword.
So what do you do that? I mean, the user is really impacted here. In terms of the stock, do you still want to be putting money into these names, or does that also represent a barrier for you for the stock?
Well, it actually increases the attractiveness of cybersecurity stocks because the demand for matching the challenge of the hacker is never ending, and it's like an arms race. The hacker will invent something creative, and then the cybersecurity firm will have to counteract that. So in my view, it's an excellent, never-ending investment opportunity when you look at companies like Palo Alto or CyberArk, because they are in the sweet spot of counterterrorism, so to speak.
Yeah, I mean, I think it's this presidency and the president's agenda has been largely about national security. And whether it's cybersecurity or increasing focus on defense and weapons with the world in a much more dangerous place, with China on the march and Russia on the march. Is this an area that you've been putting capital? Because you see these defense names higher across the board in the last 6 months.
Yes, especially the Euro defense companies. All of what you said, plus the fact that Trump has insisted NATO pay up more. So now those European defense companies have had to pay much more percentage of their GDP, which is another almost free gift to an investor, because there's so many other things, that are difficult to figure out. AI itself, for instance. But when you look at something like that, it's pretty simple and logical to say these companies are going to invest more money, therefore their revenue is going to increase, and as long as NATO has pledged an increase to their budget, it's almost, to me, a no-brainer.
Absolutely. And we're seeing, we're talking about that this morning, by the way, with the president of Poland. President Nawrocki will join me, as well as the foreign minister of Italy. Minister Tajani is here to talk about how Italy and Poland have been buying and increasing their buys of U.S. defense. Let me get your take on rates. Yields this morning trading this way as new Fed Governor Stephen Herein is calling for aggressive rate cuts. Less than a week into the job, the yield on the 10-year now down 1.5 basis points. Herein is arguing that Fed funds rate should be in the low 2% range, not above the current 4%. He's warning current policy is too restrictive and risks driving up unemployment. But you've got a debate underway. Other Fed officials are taking a more cautious view. Atlanta Federal Reserve President Raphael Bostic said he's not ready to back another cut in rates in October, projecting just one for all of 2025. He's cautioning about the lingering effect of inflation. St. Louis Federal Reserve President Alberto Musalem says that there's limited room for more easing, Peter. Your thoughts on what we'll see rest of the year here on rate cuts?
Well, he certainly came in red hot. I think he was sworn in the day before he went to that first meeting and, of course, made his voice very well heard. So I don't expect that to go away. However, it seems to be a lone voice among many other dissenters. So he's got his work cut out for him to try to persuade the other members that rates are too high. I myself am totally happy I apologize to President Trump, but I'm very happy with the current level of rates.
Yep.
I don't see that we are under tremendous stress to lower those rates. I mean, certainly the real estate argument has teeth, but other than that, you know, we were just talking about cybersecurity stocks and defense companies. I mean, there's a host of industries that are doing quite well, thank you, without tinkering to the rates. So I don't expect another rate cut through this year. In fact, I think this past rate cut was simply a tip of the hat, frankly. I don't think that they have a lot of conviction. When you listen to that press conference, I don't think the Fed has a lot of conviction in continuing to cut rates.
Gregory, I think when we heard from Chairman Powell just last week, he suggested that maybe we would see another rate cut, but that it wouldn't be opening the door to a string of rate cuts. What do you think?
So we're going to hear from the chairman today again. I think they continue to come down here on the employment side of the equation. I think Peter makes a lot of great points. I mean, Fed Governor Herein came in hot. There was one dot for 2025 below 3%. I think we know who that was. But having said that, to Peter's points, I think the committee is a little divided here. But at the end of the day, if you look at the employment, and we get the inflation number at the end of this week, we get the employment number next week. I mean, the break-even rate to keep this unemployment rate steady is close to 100K, and we're running well below that right now. So I expect the Fed to continue to come down here, but I think it will be methodical. It's not going to be as big and bold as some people would expect.
All right, we'll see. We'll be watching all of that. Peter, great to have you this morning. Thank you, sir.
You're welcome.
All right, Peter Andersen. Quick break, and then